Rob's Child. Nothing I say is investment advice. Len Alden and Jamie Dimon might be wrong about the debt spiral and about inflation and about Bitcoin and about U.S. Treasury bonds. I understand Len Alden's ideas that too much fiscal spending is inflationary. I understand that. But it is until it isn't. Once inflation gets through the whole economy, this fiscal spending that seems so high today is not going to seem so high into the future. And that's my first argument here. Number two, most of this argument is based on the idea that the politicians in charge of the fiscal spending aren't going to budge, that conservatives are going to do what they normally do, which try to refuse to raise taxes in order to address the debt situation, and liberals tend to refuse to cut giving away free stuff for spending programs. Of course, if neither of them ever budge, then yes, this can become problematic in the future. But, one thing I want to point out is that we have examples in the past of debt being a problem and having it be resolved one way or another. And to assume that there's no solution this time, I don't think so. I really don't think so. After the Great Depression was the first example that I want to bring up of arguably too much fiscal spending and raising of too much government debt. It was eventually resolved. I mean, yes, it took a war, right? World War II, where we had that big economic growth period to reduce the size of debt compared to the economy, but it happened. A second example, in the 1990s, there was a large growth of economic expansion through technology, through the 90s, through the it was a very big growthy period, and during that period they were able to reduce debt levels. In fact, we were at a surplus. For maybe even the first time in history, we were at a surplus. And this wasn't even that long ago. And then the third example I can point out is the post-financial crisis. We had an increase of government debt, but, in years following, there were actions taken to implement budgetary controls to reduce the annual deficit. And so there are three examples in history where it seemed like it was going to be a problem, and then, one way or another, it resolves itself. I think it's kind of overly pessimistic to assume that the people running the government aren't going to eventually bend to the will of the economy, because at the end, the money in a free market controls the government more than their own ideas. And so I think that it's not going to be a problem. I think we might see one or the other. Conservatives either being willing to raise taxes more, or liberals being willing to cut spending here and there, or at least keep it flat so it doesn't keep going up at a high rate in order to help reduce the spending. One way or another, I imagine it will resolve itself. I think, like I'm saying, I think the viewpoint that we're headed into a unavoidable train crash in this regard is incorrect. The next point being that we have inflation from too much fiscal spending, that the fiscal spending and the fact that rates are so much higher right now, causing this sort of idea of a debt spiral kind of happening. Okay, I get it. Like the government needs to spend more money on the interest of the debt because rates are higher. Now, Lynn Alden's argument, and I think Jamie Dimon is agreeing with this point too, although that most of my arguments are from what I got from her perspective. Anyhow, I don't think the government. I don't think the government can spend enough money in order for inflation to carry itself. So, in order to have inflation, you have to have it's her perspective seems to be really centered around fiscal spending, and I feel like ignores the private sector completely. When we have a tightening Fed and that raised rates just incredibly high, and the rates are high on the long end of the curve, it's very obvious to me that it's going to slow down business as it needs to do so. I think it's going to happen faster and harder than most people imagine. I think the narrative that, rates are still going to be higher for even longer, that's kind of what a lot of people are saying right now. Even, a lot of people are looking, at the May 2024, June, July, seeing the cuts then. I think the cuts will come earlier, to be honest. But, that's just a speculation. But my point is that I think that these ideas coming from these people that this debt is somehow going to keep inflation going. When you have people losing their jobs in the private sector, it's not the force of disinflation and deflation, I believe, are going to be much stronger than what you're going to be able to find from this supposed too much fiscal spending. On the debt side of it, one of the things she said was how, there are people buying these government treasuries all across the curve, and they're all around, they're all varying between right now 4.5 and 5.5%. And someone's getting that return on that debt. And I'm going to argue, okay, yes, someone, but is it the people that control inflation? Probably not. It's not your average Joe that's going out there and loading up on treasuries, on 2-year treasuries, 7-year, 10-year, 20-year, 30-year treasuries. These are institutions. These are people that are not going to be suffering the brunt of an economic slowdown as much. And I mean, the investing world is mostly controlled by people that are not active traders, investors, whatever you want to call them. They're the people that aren't going to be affected. And so I think that gives enough of an argument that, the economy, I think, is slowing down, and I think it's going to slow down faster than people think. Jamie Dimon is saying now that he thinks that, be careful, inflation is probably going to stay around for longer than people think. And I'm going to say I don't think so, for some of the reasons that I just listed. Now, I wanted to bring up just a simple bull case for bonds. Yes, they're selling, however, almost $2 trillion, I think it is, of Treasury securities over the next year or 6 months or something. It seems like a lot, but is it? Is that really a lot? I mean, and then, especially when you consider supply and demand, the world needs places to park its money. It needs return, and the dollar, however much people want the dollar to not be the dominant currency in the world, it still is, and it's probably going to be for a very long time. That hasn't changed. The best argument I have for that is, what's your other option? What other place do you want to invest in? The United States is it's a free market. It's a place that you can depend on for investing in, and to have guaranteed return on your dollars is still one of the most attractive things that you can possibly invest in. And that leads me to the last thing I wanted to talk about in this video, which is, okay, what is the alternative? Okay, Bitcoin. I mean, this is Lynn Alden's main thing. And by the way, I should interject right here. I have the utmost respect for Lynn Alden and her work. I follow everything she says to a T. I dive deep into what she says. I I think she's incredibly intelligent for the work. There's a lot of evidence for giving what she says a lot of weight. That said, a lot of these ideas she's putting out there, I think, they're becoming mainstream. A lot of people are listening to her. She was right about the bond. She was the one person in people that discuss finance that was a true bond bear before everyone jumped on the bond bear train. And now she says she thinks they've been oversold and doesn't know what to do with them, doesn't find them attractive or unattractive right now. Bigger point, I digress. I just wanted to interject. I have incredible respect for her work. All that said, Bitcoin, that's the alternative to the dollar. That's the alternative to treasuries, to gold, to silver. I get it. I understand the idea that it's liquid. You can send it anonymously, really, to anyone in the world. It's an unbelievable monetary system, but it's still we're still so far away from it becoming dominant in the world. And and my main take on Bitcoin is that it's an area where investors need to be extremely careful. Not a little careful, extremely careful. For these reasons. Number one, it's not stable at all. One day it's worth $65,000. The next day it's worth $15,000. Now it's $37,000. And what's it going to be tomorrow? The purchasing power that Bitcoin has fluctuates probably worse than most developing markets. Most countries that have currency that have seen hyperinflation. It's not stable. This is not a stable. It has more stability than some things, but it's still not stable, and it's certainly nowhere near as stable as the dollar. I just wanted to start with that. Number two, the liquidity is amazing, but you know what? It's not as liquid as it needs to be in order for it to become a dominant currency. You can't go until there's a day where I can take my card and go to a restaurant, go to a store, stick it in the machine, and it charges my account for the Bitcoin that I have, and then I leave. Until that's happening in real life, it's not liquid enough. Okay, it's liquid. I understand. But it's not liquid enough. Number three, it's still highly speculative. You can come up with there's a million altcoins out there. One of them might prove to be better than Bitcoin. There's probably coins that are going to be made in the future that might outpace Bitcoin at some point in the future too. The way I see Bitcoin is kind of like, it's almost like Magic the Gathering cards. Yeah, it's like the original collectible cards. And yes, that Black Lotus card when I was a kid was worth like $400, and now it's worth $500,000. Okay, But how long is that going to happen for? And there's new games that come out. There's these Pokemon cards, and we're going to have, in a generation or two, who knows if Magic the Gathering will even exist and what the value of those cards will be. It's like, it's the original game in town, but it's simply highly speculative. It simply is still very highly speculative. This is not a non-speculative instrument. Now, like I said, I'm not a total bear on Bitcoin. I do believe maintaining around a 2% allocation to Bitcoin for a portfolio is a perfectly fine idea. It's not too much risk, and provides plenty of reward, I think, for that amount of allocation. But so I made this whole video kind of in trying to argue against some of these views that are becoming quickly much more mainstream. And just, regarding that idea, when ideas become mainstream and everybody jumps on that side of the boat, well, what happens? You know what happens. That side of the boat tends to sink, and the other side tends to go up. And so, regarding assets again, when it comes to treasury bonds, long duration treasury bonds, it's the most hated security out there right now, I think. And I think it's the most undervalued. And once that story becomes flipped on its head and everyone's rushing to buy those bonds, hopefully I'll be another step ahead of the game. And that's my plan. Nothing I say is investment advice. I hope you enjoyed this little episode. Rob's Child.